Of the day though, thought we run our eye over a bit of a perennial favourite here on the call, Endeavour Group, since it was spun out of Woolies not that long ago. Owner of Dan Murphy's, of course, refused to vote on the election of former Woolworths boss Bill Wavish to the board of the company. There's a bit of unsettledness going on the board of Endeavour. It's always seemed to be a really strong defensive stock. At the moment, Bill Wavish, of course, from Woolworths, then ran the sort of private equity project on Myer not that long ago, and Dick Smith, I think, as well. The bid looks to have been killed off, at least for the time being, unless Bill can obtain a complex regulatory approval from state and territory governments in the next 5 weeks. The retail giant warned that the resolution would be withdrawn if Mr Wavish did not receive all necessary regulatory and probity clearances. Daniel, when this happens on the board of a stock like Endeavour, what do you think about it? Does it change your view on the stock?
Look, I don't think it necessarily changes our view, especially because Endeavour's obviously a larger corporation. So, it's concerning from a governance point of view, but, it's not as if the board members have, a huge swing in day-to-day operations. I think with smaller companies, the boards and the management teams are much bigger drivers. But, it's seemed to be a common theme with the Matheson family, hasn't it, Koshi, in recent months, creating a bit of a stir on boards. And obviously they're the largest shareholders. And there was a great article today in the AFR about it. Look, I think bottom line is there's a lot of regulatory uncertainty and risk. And it doesn't help that the company, it doesn't actually paint very fine details in terms of the bottom line drivers from the gaming segment. It's more so overall numbers they provide you. So from an analyst point of view, it is hard to see how the gaming regulations will impact earnings. Some say it's to the tune of 5% a year, some say it's considerably more than that. So I think that uncertainty alone is just what's causing volatility in the stock, as well as they do have, a pretty large pile of debt on the balance sheet, not unmanageable at this point yet, but certainly, if things don't turn around in terms of performance, and we've seen with Star Entertainment what happens when you have regulatory uncertainty, earnings uncertainty, and too much debt. I'm not saying it's going to head down the same path as that in any way, but these types of things tend to be a bit of an overhang on the stock. So we're watching it closely. We're more of a hold at the moment. We do own the stock, and we think we'll probably like to see a bit of that uncertainty resolved before upgrading it to more of a buy.
Okay. All right, because I was going to ask you, that's a shocking chart. It has just plunged, and this was a stock that when we went into an economic downturn, all the analysts were saying, hey, buy Endeavour. It's sort of inflation-proof, it's recession-proof. God, it's horrible.
I think as well, Koshi, you have to remember, they really over-earned during COVID. With the profits in Dan Murphy's, everyone was buying alcohol at home because obviously we didn't have an outlet in terms of restaurants and stuff. So the earnings were just coming off a really high base.
Right. Okay. Shaun, what do you think?
I agree with a lot of the comments that Daniel made. And I was having a look once we received this one this morning. A lot of the analysts are only predicting or putting a price target of around $6 to $6.40 on it, so there isn't a lot of upside.
Yeah.
I think they were over-earning during COVID. I think and I think the debt, I think while it is manageable, like Daniel said, I still have, I wouldn't be looking to buy right now, but if you're already in, I'd hold. I think with China looking like they're going to ease the tariffs on the wine trade, that might give it a little bit of a kick, but I don't think it's enough to make it a buy.
Because it's they have quality assets, don't they? It's sort of, when you drop down like that, a lot of sort of private investors would be thinking, oh, is this a bargain when it's being slammed because of the board disruptions?
Yeah, I think that's a real risk. Right. And we have a lot of discussions with our clients around these things when charts look attractive and appealing, whereas the chart doesn't always tell the whole story, especially when you've got these potential headwinds in your way.
Yeah. It's a good lesson, isn't it?
It is, and I just don't see enough value to pile into the stock now.
So you got time on your side.
Yeah. Okay.